if you had sold shares, mutual funds, jewelry, real estate, and so on in the financial year 2022-23, you might have ended up with capital gains or losses. Now make sure you disclose it while properly filing your income tax returns this month. Remember, capital gains and losses are taxed differently, and there are specific ITR forms that you need to select for filing of returns. Let's delve deeper into capital assets, treatment of gains and losses from transactions in capital assets, and the applicable ITR forms. First of all, let's understand what are capital assets. Well, any property owned by an assessee, which is land, house, shops, apartments, as well as investments in financial instruments such as shares, mutual funds, and gold bonds, can classify as capital assets. In addition, items like jewelry, valuable gemstones, ornaments made of precious metals like silver, gold, or platinum, archaeological collections, drawings, paintings, sculpture, or any other form of artwork, even if used for personal purposes, are also classified as capital assets. Well, these different assets are classified as long-term or short-term, and depending on that, they have varied tax rates. So what do you do about the capital losses that are incurred? Well, you can set off and carry forward those. You cannot set off the losses against the income under any other head, but you can do so against any other capital asset in certain situations. For example, for short-term capital losses, they can be set off against both short-term as well as long-term capital gains. But long-term capital gains can be set off only against long-term capital gains. No capital losses can be set off against gains from virtual digital assets, which is VDAs, nor any capital loss from such VDAs can be offset against any other capital gains. Now, capital losses which cannot be set off during the relevant financial year would be allowed to be carried forward for 8 years immediately following the year in which such losses incurred. This allows you to utilize the losses effectively and reduce your overall tax liability over the time. Then which ITR form should you file if you have capital gains and losses to report? Well, taxpayers having gains or losses from capital assets are generally required to file ITR 2, provided they do not have gains or losses which are to be taxed under the head business from income. In such a case, taxpayers must file ITR 3, and for those opting presumptive tax can only file ITR number 4. Now, selecting the correct ITR form is a must. Filing a return in the wrong ITR form makes it invalid or will be considered as not being filed at all. So what are you waiting for? 31st July is near. Go and file your income tax returns.